Hello everyone, welcome back to the channel, best place for long-term stock investors. Now in this week's quick dive, we'll be talking about three very interesting stocks, and one is Wong Engineering, number two, freight management, and number three, Yinson. Now, caveat or disclaimer, we do own some of the shares mentioned in this video.
We're going to kick off the first part of our series called Project Small, and we're covering three companies which are small market cap: Freight Management, Sensoft, and Wong Engineering. It's going to be held on the 2nd of September, 8:30 p.m., and the link is in the comment section below.
Okay, let's talk about first stock, John, which is Freight Management, however you want to pronounce it. Very boring name, and of course historically a very boring company as well. Returns on capital pretty low, although dividends pretty decent. It was undervalued, so-called, for a very long time. But then if you look at my screen over the past year, it's up nearly 3 times, right? In fact, if you include dividends, it's probably definitely up 3 times. So, Freight Management is a stock that we ourselves researched on a few years back. We've actually met the management, which, by the way, pretty decent management. And we didn't see much excitement in it. It had a market cap of like sub 200 or maybe 150 million. And now, obviously, it's nearly $500 million in market cap. So, I guess, since it's gone up a lot, current existing shareholders or shareholders who, might want to get in, they will be asking, can it go up further essentially? Or is the spike in price over the past year temporary?
I guess we have to come to look at global trade or the global supply chain in a very different light, NJ. I think most times people take for granted, products or services that we use that rely so much on, moving things around, which is where freight management is lah. I remember the first time I went to the States and I got hooked on Amazon Prime, same day delivery kind of service. And we kind of take things for granted, especially today with the prevalence of Lazada and Shopee. So what I'm trying to highlight on the screen right now is actually this story, pretty interesting excerpt that came out yesterday about fertilizers. One box of fertilizers that got stuck somewhere in a port of Shanghai, and it was expected to be delivered 2 months later. In the end, it ended up being stuck for more than 6 months. So the fertilizer never got to the farms in the US. And this is just a glimpse of what can happen when global trade is stuck. Because for those of you who have been invested for quite some time and you followed the news about this stuck ship, the Ever Given, which is the fleet owner is called Evergreen. This was a photo taken on the 23rd of March. It actually caused traffic in the Suez Canal, one of the busiest canals in the world, to come to a standstill. And on this next screen, it highlights how much trade that is being held up because of one stuck ship, and how global we are these days, with trade being freighted around so much, with the amount of goods transferred from one country to the other, and it's so reliant on freight services, MJ. I mean, looking at it, if you use the ship through the Suez Canal, it would have saved you an average of 8 to 9 days of shipping. And a day of shipping it costs a lot of money. So I don't know. What are your thoughts about how China and how global trade around the world will impact us in the future? Your thoughts, MJ?
I mean, I think there's no doubt that it's only going to increase thanks to things like e-commerce and sea sea freight is always going to be the cheapest among all, air or land. But I think for freight management, it's interesting because a lot of them are mostly like they have these Scania Prime trucks, right? So they are mostly on land, correct me if I'm wrong.
Yeah,
But
correct. Yeah.
basically why we are going to cover this company, on Thursday, September the 2nd, is because what interests us is the low coverage, right? We were actually doing a Google search before this, and this company is very, very crucial in the supply chain of essentially delivering goods. And yet it's not covered a lot. It's going to ride on e-commerce. Of course, it's not going to be like an e-commerce company, but it's going to ride on e-commerce a lot because at the end of the day, it is sending goods, whether through their what they call their LCLs, or their less than container loads, or their their trucks, essentially, right? So that's why we were very interested in this company, and it's such a crucial player. It was undervalued for a very long time, and those are my current thoughts about the company.
Yeah. Also, the other thing we like to highlight is there is a lot of confusion in between a freight company or freight forwarder versus that of a last mile delivery company. So we are so used to the brands like JNT Express, Lazada Express, who else? GDEX, CityLink, which are last mile players, and they are quite different in terms of their business model compared to a freight forwarder. And I think we need to make that distinction clear, and we're going to do that during our Thursday deep dive.
Yeah. Basically, the transportation sector is very difficult to understand because they are, just think of if you order any products, right? Let's say it's made in Ireland or something like that. How will it get to, your house in Malaysia? There's a lot of things, right? It's go through certain. First of all, the guy needs to manufacture the things. It needs to be in a warehouse. Someone going to manage the warehouse. Then you gotta go through different delivery methods, and freight forwarding is just one of them.
Correct.
Right, in this very long, complicated chain. It's a very difficult business to enter, which is also why we like the business. But that's something to look forward to, and we look forward to sharing a lot of the more details in our upcoming session.
Yeah.
All right, guys, if you have certain investments that you want us to review, like you're not sure whether it's a good investment or not, and you just need a second thought, you can actually just send us an email in a Google document or in a Google Sheets. Now, the key thing is that we're only going to review it if you've done the work, right? If you've actually done the research and there's certain things that you want to have a second opinion on. We're not going to review emails like, hey, John and MJ, can you look at Hong Leong Group? And then that's it. That's the whole email. No, we actually need to see that you've done the work. And if your work is really good, definitely you'll be a candidate to be in our internal research team. Okay, next, John, we talk about Yinson. Yinson is probably all-time one of the best stocks in Malaysian history. If you look at the chart in front of me right now, it's basically up like 29 times over the past, I think, since 2006, and then you include dividends and all the other stuff, it's definitely a lot higher. However, when you look at the 1-year stock chart, it's basically down 20%, right? And why is that the case? Now, if you go to the slides, you see that there's this new team nowadays called ESG, right? ESG is, it's a very long word. It's environmental, social governance. Basically, now it's not enough that capitalism or companies just make money, right? There needs to be what we call conscious capitalism, meaning to say that, sure, you can make profits, but they need to be in industries that are conducive to the environment, doesn't ruin the environment, and of course, in the eyes of ESG proponents, people who support ESG, oil and gas companies do not fit the mold. Now, that is why a lot of funds now they have what we call an ESG mandate, so they can only buy stocks that are ESG compliant, or in less extreme versions, they will limit their exposure to companies that are not ESG compliant, like, for example, Yinson. In fact, I'm not sure if it's the right word, but it's ESG and Yinson or any oil and gas stock, it's not exactly friend, right? Now, of course, the company is trying to do things to change it, but it's predominantly related to FPSOs, which is just transport vehicles for oils. And that is why Yinson has not been doing very well. There have been goals, I'm not sure whether within the country, certainly globally, to have what we call a net zero carbon emission. It means that the amount of carbon they use and the amount of carbon that they restore is equal, right? And we'll talk a little bit more about that. But I just want to share with you guys in the next slide, right? Yinson, although they are predominantly oil and gas based, they do have assets in relation to what we call solar or ESG compliant business models, right? So you can see here they have in India certain projects that last all the way until 2045. So it's not like the company is actually not doing anything about it. They are very aware. We've met the management before. They've told us the same thing in private, right? Now, this actually reminds me, and I have to thank our good friend Rondi for this idea from Stockbit. You guys can go check it out. Really, really cool app about the cigarette, right, John? I don't know if you remember. I think about in the early 2000s, right, there was this whole thing about how cigarette was very unhealthy for the human body. And so people were actually chucking away cigarette stocks, right? A lot of these companies, and
including Altria. I remember
Altria,
they dumped Altria like as if it would go out of fashion, and boy were they were they proven wrong when it returned a multi-bagger in years later.
Yeah, so exactly, right. So I mean, just to show, I forgot to put it here.
You have BAT.
Yes, but it's not the full stock chart. So while I pull this up, right, I think what I'm trying to say is that sometimes investors can overreact.
Yeah.
And it might be the case. So yeah, anyway, on the screen now, of course, BAT, the British company, is not doing well over the past 5 years for various reasons. But this is more to do with competition, right? With vaping and things like even weed legalization in certain parts in America, right? These are competition, but that's for another day. But if you look at in the 2000s, right, there was a big decline and it was very unpopular. But then over time, it grew a lot, right? It grew like, even 10 times the stock price. So it could be the case for ESG. Certainly that is my opinion. Will the reaction be the exact same for oil and gas stocks compared to cigarettes? I'm not so sure. What do you think, John?
Yeah, I think most people think that energy is going to transition everything into renewable. We're gonna live off solar and wind and not having a single drop of oil. I think that's quite a big fallacy, to be honest. And I think the CEO of Petronas made it very clear in their half-yearly earnings call, for whatever you call it, financial performance briefing. And they said that exploration is not dead. I want to be clear about this. A decarbonized future is not a future completely absent of hydrocarbons. So I'm paraphrasing what he said. Now, I think, as you pointed out earlier, and what we have researched on, a lot of these oil companies are getting a very bad light because they are, not seem to be carbon neutral or carbon positive, but more carbon negative, where there's a lot of carbon footprint they're taking up because of oil exploration. But in the world where it is ideal, where economics and commercial sense or commercial objectives are not required, then maybe yes. But in a world where dollars and cents speak, I guess people's desire or requirement for energy and consumption is going to be more and more as the income of the population actually grows, I think we cannot wean off hydrocarbons in entirety lah. And the reason why we felt that it was important for us to bring this up is because based on our conversations with the management of Yinson, there's a lot of what we call carbon neutral projects that are being bidded up by large oil and gas companies just to hit their goals. And because of that, the valuations and the commercial, commercial viability of these projects are in question. You know, so you've got BP, you've got Shell, and all these big guys trying to become carbon neutral. And what they do is to offset that, they buy green energy kind of projects, but commercially doesn't make sense. And when that happens, it doesn't allow smaller players or it doesn't give good economics to smaller players who want to try to deneutralize their carbon footprint by getting into this very expensive. You know, solar is very, very expensive. And, you know, based on what we've heard from the Yinson management and also other project players, you notice that solar projects on average, if you can get high single-digit IRR returns, you'll be very, very thankful already. Remember?
Yeah. It's I mean, renewables is a low return industry, right? And that is also the reason why companies are not that excited to invest too heavily, right? Unless maybe if they can get massive subsidies, then, you know, the IRR can increase. But apart from that, I really don't see it being as good anymore. And fundamentally, Yinson is going to still make more money from oil and gas. But, you know, you never know. Industries can change. New business models can appear. And I can tell you that in our chats with the Yinson management, they are looking for spaces even within the solar industry or any, you know, power generation industry, right? Because essentially they are an energy company and they are always looking to find niches within the industry that is very what they call has cash flow integrity, right? Meaning to say that the cash flows are very strong and very recurring. And, you know, we also asked them this question, you know, what is a company that you really look up to? And then I remember management, right, CY said that Tesla. So I'm not saying that they want to become a Tesla, but certainly these are some of their role models. So you can expect them to push the company in a similar direction.
I think the key message to summarize what we both said is that don't get so hyped up on companies that are going into solar. You know, there's a lot of news, a lot of hype, and then people invest into that. But always look at the commercial. Don't buy hope. buy profit.
Oh yeah, true. Alright guys, of course if you enjoyed the video, make sure to share it with some of your friends, give it a like, subscribe, comment whatever you want to comment, and of course remember to click on the notification bell so that whenever we have a new video, you'll know about it straight away. Alright John, so next we talk about a pretty under the radar stock. If you look at the slide, right, yes, it's been up 15, nearly 19% in the past 5 days, right, which is Wong Engineering, which is also a company that we're going to cover in our upcoming Project Small deep dive session. You know, if you didn't already know, link to sign up is in the description and comments. But basically, there was a pump, right, and it's a very tiny small cap stock, which is why we got really interested about it. And it was pretty silent for quite a while. Suddenly it woke up alongside a few other tech companies a few months ago, and then it woke up, quote unquote, again in the past week. So what does look, we cannot explain everything about what Wong does because it will take too long, which is why we have a separate session for this. But in a very, very summarized way, John, what in the world does Wong Engineering does?
I think the keyword is precision engineering and more recently property development, which is which is something, you know, we always discuss about this dilemma of owners of companies to grow revenue And if all else fails, property. I mean, jokes aside lah. But if all else fails, go into property development. But what's pretty interesting about them is they've been around for quite some time, and they actually serve industries that need what we call precision machine parts. And there are various players in this industry. Among them, I think Kobe or Sam Engineering that has seen a huge rise in their share price. But I think where we will try to dive deeper is to understand the different sub-niches that these guys play. And Wong, in its part, has been serving a lot of the semiconductor industry. They're trying to branch into other industries as well. So it's pretty interesting to see. And they have, taken on new shareholders, and hopefully the management can shed some light into where they're going to bring this business to and what kind of new revenue generations they're going to bring into the company lah. I would position them as a precision engineering company as well as somewhat of a property developer.
Yeah, I think that's one of the few things we talk about, the property development. But I just talk a little bit more now, which is, I think that the big worry for me is potentially this property development, and it drag returns down. But then at the same time, Wong Engineering is in a very similar industry, not exactly the same, of course, as UWC, right? UWC has been a darling, right? Almost a darling in the past few years, and they're similar situation, although they do manufacture different parts, right? We just want to be clear. And this is a very complicated industry, and it's a very, in a way, boring industry. The minute you hear the word precision engineering, straight away people get turned off. But at the same time, because of the word precision engineering, that's why the stock prices has been going up a lot, right? And some companies will be justified, some companies will not be justified. We think that Wong is interesting because I think it's justified, but because of that property segment, we have to pay a little bit more attention. However, sneak peek, when we speak to our property friends and development friends, right, they tell us that actually Wong Engineering has about at worst average or even above average levels when it comes to their property investing. So that is also very interesting, right? Maybe they will end up doing better in property investing.
Change of business. They may approach Bursa in the future. Change of business nature. You never know.
And what is exciting about what is exciting about the company partially as well is that the new shareholders, which came in 2017, Tiong Nam, correct? They have done a good job in consolidating the operations, right? So it's almost like a new business, even though it's been around for quite a long time. Will you agree?
Yeah. So hopefully they can rejuvenate this, and we'll see in the deep dive. Let's look at the performance, look at the numbers, and see how well do they really. I mean, when we invest, right, a lot of times we read the story or the news that companies present, but the real justification is how to read in between the lines and read in between the numbers. And that's where it takes a little bit more time, takes a little bit more skill and effort, but I think it's well worth it, because if you're trying to look for a multi-bagger that will give you 2 times, 3 times, or at least 5 times, you need to do the work. If you don't do the work, very likely you are banging a lot on hope and luck. I think that's how.
Or we will help you do some of the work, right?
Yeah.
Some of the work. Okay, guys. I hope you enjoyed this episode, and see you next week.
Bye.